The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Good morning, everyone. Basil Chapman here on this Friday, the 8th of August. We're looking at the Dow up 269 at 44,239. Right at the 9-period moving average, which has been resistance, except for yesterday where it spiked over it and it came back. I've drawn in this H pattern, and we're going to be looking at this to see if I can just find it right here, just so that you know what I'm talking about. Where did it go? Oh, there it is. Okay. So I always look at patterns as straight line up, straight line down, cup formation or arch formation or a mix of the two. It's like this right here. And in this particular instance, I have been anticipating that we got a second H pattern. There was one right there, would pull back, ran up, failed to make a new high, arched over and took out the left side high. And now we've done the same thing with this leg B, which might be a peak B today, but there's a lot of buying going on in this market. Look at this. So the Dow is weak. It's in a sell mode. All the technicals are weak. And we'll see if it can take, by Monday or Tuesday, if it takes out this high that was made yesterday of 44,498.43. That's going to be very impressive. We are short. We remain short from Thursday a week ago. Before the open, we went short, and then the market tanked on the Friday. Now it's coming back, but not quite as strong as the others. The weekly chart starting to weaken a little bit. It's at a peak E already, and it's kind of struggling. Yeah, that's because of the mix of the market in the Dow 30. But look at this, the S&P. We actually did short the very exact high, the day of the high, as it was turning down. And then we got stopped out for just a fractional profit or fraction. It just depends when you got out, but fractional profit or fractional loss. It had a very nice gain as it dropped that Friday. But now it's coming back quite strong. But look, the MACD is weak. The relative strength is rattling a little bit, but it's still kind of weak. Stochastic's very weak at 57%. The on-balance volumes are weak, but the 9-period moving average with all that selling pressure never went pink and did not go negative. It is still green. And that, I'll be talking about that in my webinar coming up on Tuesday, about trend turns. It's called Chapman Wave Technical Tools that help identify trends and trend changes, sector rotation, stock selection, trading around core positions, using money management to maintain your capital. And then I'll answer questions as they come up immediately, because I think that's always very important. But what I have said, and I've said this over and over again, we will not get a sustained move to the downside until, and I'm going to refine this. I'm going back to what I used to call it, and then people got it mixed up with a dark cloud candle. I have nothing to do with that. I'm going back to calling the Chapman Wave dark news cloud cover. I mean, I love my technical expressions to be self-contained. This explains exactly what I'm looking at. Until you can get selling pressure that is accompanied by by news that the market finally perceives as bad, and then the media promulgate just reinforces that theme, and they'll be very quick to do that. And they haven't been able to do it just yet, even with tariffs. You don't get sustained selling. You get these kind of short-term. Look, this is basically in the trading band for some time. This is the Dow. I use it only with the Dow. And so far, yes, it's got this cap of the internal high and the residual high. I'm even wondering, do I have to now think that this is another internal low and a residual low? When I do my video this afternoon, I'll be able to clarify that. For subscribers, I do an hour and a quarter, hour and sometimes more video every week, Friday afternoon or Saturday morning. For subscribers, it's the overview. We go through all the positions that we have, and I talk about what we would like to get, what's working, what's not working, etc. The webinar on Tuesday night is more a functional one. It's talking about patterns, it's talking about the Chapman wave notation, it's talking about where we are, what we're looking at, a little differently and purely in the technical terms of Chapman wave education. All right, so this is the S&P right now, up 45. The QQQ, did it make a new recovery high from yesterday? Let me go there right here. 1, 2, 3, 1, 2, 3. There we go. Yes. So the QQQ is very strong. I don't think you can get a major sell-off under these conditions. And all I can say is, within the context of what we're looking at right now, yes, it's choppy, but actually the weekly chart is still absolutely, look at this fantastic weekly chart in the QQQ, days young, anything can happen. It's a Friday. We haven't yet taken out, if we go above 574.63 to 574.64, 1 penny higher, that's the way the Chapman wave methodology works. It continues leg B to the upside. In fact, if it goes to 574.63, that still continues leg B. If there's a penny less, it becomes a peak B. Amazing. And the monthly chart is still very strong. IWM is a little different. It's like the Dow. It's doing okay, but it's not great. Up 152 at 221.35. Hasn't taken out or even got close to yesterday's high. It's already a peak D in the weekly charts of the Dow 30 and the IWM Russell iShares, small caps, kind of struggling here. I'm going to go to this since we've got time. This is Technical Friday. SMHs, semiconductors hasn't taken out yesterday's high yet. It's at 292.67, up $1.55, and that just says to me where the semis go, because remember I talk about semis as being the crude oil of the 2000s. Remember in the 1900s and into the 2000s, we've got crude oil as just about in everything that's man-made, right? But chips have taken over. And therefore, you've got to consider that the semiconductors are the oil of the 21st century. So with that in mind, where the semis are at 297.38 was the all-time high back on the 30th of July. Pulls back to just under 280, comes all the way back, but now it is in a peak A and a leg B. It could be a peak B today. Therefore, I'm going to draw this in, and these are the patterns that we're going to be looking at both this afternoon and certainly in great detail on Tuesday evening, Tuesday at 4 o'clock for my webinar for subscribers. You can become a subscriber. You can get all my webinars. You remember the one, I've got one that's on the, where does it go? It's right here. On narrow rectangles and large rectangles. Talk about rectangles. What do we have in gold? Look at this. Gold, I spoke about this a long time ago. It's up 31 right now, 34.84. I said, this rectangle, and I drew it in. I said, you're stuck, you're trapped between these, the boundary on the upside, which is not the all-time high that was made back on the 1st of April, was it? Around about April, the week of the 25th of April, and at 35.94.1. This is the continuous contract, but this is the one right here with the high of 35.33. And look where we went to yesterday, or last night. We went to 34.8. So this is the rectangle resistance. If at any point next week we start to see gold in the 35.50s, wow, something else is happening altogether. But in the meantime, I think it's kind of toppy. It's in leg D, but it's in this rectangle formation. Look at silver, SI. Silver is trading up 24 cents at 38.53. Slightly different chart pattern right here, a little bit more positive. I'll be back in a moment. Dow's at 273, S&P's up 39. Basil, Chapman, Tiger Technicians Hour. See you in a moment.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Hi folks, so the GDX, which is the gold market vectors miners ETF, is trading at 58.51, up 57 cents. I've got this as a leg E, but remember yesterday, or a couple of days now, I've been looking at this and saying, look, this is up channel, Chapman Wave inside track repellent zone. It went right to the outer end, and we're going to see if this starts to denote some kind of a pullback coming up by next week. But I have a target of the 66.98 high of September of 2011, but it's trading at 50. That's a long way to go, but I've got it as coming in next week, next month, I'm sorry. But to me, this just looks too parabolic. I just don't know if it's going to work. It looks to me like it would happen much later than about, what is that? So it'll be maybe sometime in October, maybe November. But anyway, we'll see what happens. Most importantly, what we are looking at is the dollar. Just still weak. It's up 16 ticks at 98.25. It's down. The 9-period moving average hasn't turned negative, but I think it is. Look at that weekly chart. This is really poor. That's the daily. This is the weekly. This is the monthly. Not good action at all. So that's that. And I wanted to do a couple of other things. Okay. So there are a bunch of questions. Let me just get to them. So Mr. Ross says, hey, Chapman Wave, that's me. We briefly discussed HMY earlier this week. You remember HMY? I said I would not touch it. I just keep it for this particular moment, and then we can look at it in a couple of days' time. Well, it's gone. So this is that D that we were looking at in the daily chart. It's now gone much higher than that. D was at about 1562. It actually went to 1622. And now it's it's up 3 cents today, but it's pulling back a little bit. So here's the question. The question is, HMY's Harmony Gold, South African gold miner. We briefly discussed HMY earlier this week. I have a great long-term positions from the $5 to the $7 range. I'm trying to figure out if I should lighten up on this move higher and buy back in on a pullback down to the 12-13 area. I can certainly hold through a pullback, but would love to buy back in lower after getting out. Hard decision. So after getting out. Oh, that's implying that you do get out. So this is what I'm going to, now I can do this. I can recommend to you, just based on the chart formation as well. So this is a harmony. It's a little, I had a question about HL, which is a heckler mining. This gapped up yesterday, and it's even higher today at 750. It's up 28 cents. This is a leg D as well. A lot of these Ds are coming in. Weekly chart is in A, B, C, leg C. Monthly chart hasn't quite made leg D. That's a little different because of the steadiness of this particular move, but with very volatile action when it pulls back. So I'd have to give a different answer. The question is about, I'm going to do the two together. So heckler mining, I would suggest right here, trading at $7.50. If you're in for the long term, just to kind of reward yourself for this big move up, take a little bit off right now. I need to see that it holds. It almost certainly at some point will take out this low that was made yesterday of 694. It's trading at 749. This is a little different because when this one gives back, it gives back. It's really tough. So in this particular instance, I'm not sure what the question was, but it came in as a comment. And I've also got it as in my screamer list, my under $10 screamer list, it's showing up. So I'm going to look at this and say, heckler mining is slightly different. I'm going to come back to it because the question here is a little different. Look at the chart pattern for Harmony Gold. It doesn't have the same whippy pattern in a big wide range with big percentage moves. This is different. So in this particular case, this is going to be your plan. You've had really, really good gains. The high that was made back in March, was it? Yeah, April, the week of the 18th of April at 1877. I would put that as a target, but because this rectangle is just slowly making kind of an inverted head and shoulders pattern, but most importantly, it's almost like a cup formation. I need to see that it closes above this candle of the week of the 9th of May, which is at 1654 as a high. It needs to close above it. Once it closes above it, I can say this ugly candle, after making that recovery high, a yearly high actually, at 18.61, the week of the 25th, the week after that high was made, that would be what you want to see, because then it says, now I can start tackling this big red candle. But until then, it's just a little different. So in this case, I'm going to say for Harmony, take a little bit off right now, and the plan would be to have patience. You see, if it takes out this gap high, the gap up of the 4th of August, which has a low of 14.94, I think it could actually do quite a bit of filling of this gap. So, and the chart right now, because it's only just breaking this trend line, and now I can move the trend. Remember, trend lines are there for your information. Right now, because we've broken above it, it's already done what it needed to do, even though the week hasn't closed. But now I'm going to make the high of the rectangle right there. Now there's a new challenge. So in this case, take a small bit off for Harmony. I wouldn't get out of Harmony because we just don't know what's happening in that whole area of gold and silver. You can't tell. So HMY trading at 15.86, up 4 cents right now. I'm saying take a little bit off, and the plan, this is your plan. And you said in the 12 to 13, you do it the other way around. When we're going down, I use the top number and then the bottom. So I'll say 13 to 12 because we're going down. But it's not that. I would just say to you, give me a yell. If this, taking a little bit off, if this gets to 15, boy, it doesn't sound like much. 15.87, 30 cents down. I'm saying if it takes out 1550 on a closing basis, give me a yell, because if it starts to, if the 9-period moving average and the stochastic are still very strong, it's 94% right now, on a pullback to the 1550 or 1540 area, I might say, you know what, split the new position that you're going to put back into two and start there, and then have another one lower down, because this is holding very well. Okay, so that's that. So for the heckler, so that's a different. So you're taking a little bit off. It's not just a smidge or a tad. You're actually taking something off and saying, this is what I want to pull back, because I want to add to the velocity of my cumulative average price by having maybe a 5% gain on a pullback, or even maybe a little bit more. Maybe it's even 10%. Because I'm getting in at a lower price, and now my average cost is even better. That's the way I'm looking at it. Heckler is something very different. So heckler mining, because of the chart formation right now, I'm just going to say, let's say you take off a little bit right now, if that was the question, and don't do anything. Just take a little bit off as a reward, and then we'll see whether or not you put back anything. You know, even if it's 70 cents lower, so not 70 cents. Yeah, 70 cents. No, even if it's, say, 50 cents lower in the 7 area, that means you've garnered an extra percentage if you're coming back and it goes back to a new high. But in this case, I'm doing it because it's gapped up and it's made a new recovery high. So take a little bit off just to reward yourself, but I wouldn't do anything other than that. I'll be right back. How's it?
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
This portion of the Tiger Technicians Hour is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Hi, folks, we're back, and I'm just looking at, so a question came in about Bitcoin. So Bitcoin is kind of struggling right here, and what I'd said is, if I'm correct in my analysis, and you never know, right? You have to, history proves whether you're right or wrong. I'm saying that I think that Bitcoin has done fantastically, and that right now it's seeing some money being transferred from the Bitcoin itself, and I believe it's going to Ethereum, ETH. Look, here's Bitcoin's chart, having pulled back in a down channel, lower highs and lower lows. Not a big deal, but low lows and lower highs. And here is Ethereum going to a new recovery high on the yearly chart, because the previous high. Now, I remember doing this and talking about it and saying, I'm going to use this as a phantom peak right here, because there was a hiccup in the on-balance volume, and it just suggests that I should use it, because if I get to a peak C, but it's really a D in the alternate count for the Chapman methodology, I'd rather know that I'm at a D and that it could go higher, but at least I'm starting to take action. But we didn't have it, so I didn't take action. Someone asked me about it, and this is way back in January or so. And then I just counted after that. I put it in red to say that is not real. That is my interpretation of either a parallel high or so close that I can call it a high, so that when I get to a peak that I would normally call C, it actually could be a D, and therefore you've got to be really careful. Well, lo and behold, that D in the 37s took us down to the 13s, in fact. And then it started to move. And now look at this. This is the Chapman methodology that I teach, and I'll go through this in my webinar on Tuesday. This is where I use the plumb line. I try to count the number of bars on the left to a plumb line at the low and say, there's a chance, using my Chapman wave inside wedge from a particular trough on the left side to a high, that this could be the Chapman wave dashed green on the way up, resistance, support, target support line that I'm looking at, but it's also the target resistance line. And it took, look, it's a week late, and it hasn't yet made that high that was made back on the in December, the week of the 20th of December 2024 at 38.78. We're at trading right now, the high today of 37.85. So about $1 less. But look at this. This is grayscale, Ethereum, ETH is a symbol, up 80 cents at 37.27. So using this technique, look, the MACD is strong, the stochastics at 91, fabulous. The on-balance volume did pull back, and you did get a pullback with price. So this is only a leg C in a buy mode, and it should go to a D. And that should go at least towards the rule of thumb. It's like a big rectangle formation, basically forming a cup with higher highs and higher lows. And the rule is it should go to a D just under, right on, or just above the previous high. And here we are in leg C. So I'm saying that I believe, I could be wrong because this is tough. I believe that we are in, this is peak A, and maybe this is an F/B. I'm leaning towards the B, but we haven't got the proof yet of a new rally mode in Ethereum trying to go to an all-time high. All right, I hope that helps you. So the next question came in. Oh, what did I do? Next question. I did that. Hi, Basil. A week ago, I posted BTAI here in the den at 165 in the pre-market on some very encouraging late-stage trial news and positive potential approval with the FDA. Dan really does this fabulously. This morning is trading. BTAI. Let me have a look. BTAI. Wow, look at that. Fantastic. Didn't I do the notation? This is an A. It's a very simple notation. This is an A. This is a B. And this is an underneath it. Remember, this is your starting point right here. I don't even know what this BTA is. BioXL. Yeah, we did this before. I lost the notation. Sorry. And then that means because this is your starting point, you count every single peak. We'll talk about this in my webinar on Tuesday. Look, this is a peak A and a B. This is an A. Underneath it, gray A, gray B, and then it's an overlapping wave. It goes to a C. C says you should at some point go to a D, but look at that sharp pullback, and then all of a sudden the last 5 sessions all week, big green candle, and there's your D, and there's your E. Wow, that is fantastic. Trading at 450, up only 27%, up 93 cents at 434. Very nice, good action. Okay, with that said, morning and trading. Trading, as I typed, is appreciating the long-term chart. Looks quite ugly. They've had financing and restructuring issues. Do you see the daily 200 period EMA around 615? It's so far up I can't even see it. Yes, around. I've got mine is at 749. 749. That's the exponential moving average. All right. As a target, no, it's way, way, way below that. All I can say is that this weekly chart, the 9 period for the first time since it was trading up in, has it ever been green? Yeah, since it was trading up at the 200 period moving average of 300 and something back in April of 2023, it crossed negative, and that hasn't been there since. So now it's amazing that it's taken all this time, and the 9 period moving average has just crossed positive. This is really good action, but it's biotech. It's so hard to tell. It has these big spikes, and then you look at these big spikes and gives it up. This will be the first weekly chart where no matter what happens for the rest of the day, I suspect this will be the first big green candle on a weekly basis that didn't turn into a long wick, a big shadow with the price down at the bottom. That's an encouraging sign. Hey, very good. Let me do it this way. Key support right now on any sharp pullback is at 426. I would just say to you, $3.20 to $2.80. Really important support. That's more important than what we're looking at on the upside. Oh, and then someone just mentioned ASA. Ah, amazing. I haven't spoken about it for ages, but I wrote down right here on my notes, ASA. Right now, look at this. This is the ASA is the Gold and Precious Metals Limited, a South African company. It's basically, it's like a fund. So it had a monthly instant restart. So I put the last 2 months ago, I put G/C because the instant restart, especially in monthly charts, very often goes to a G/C. And then goes to the D. Well, this month it went to the D in the, oh man, time's flying. I've got so much to do still. A D in the monthly chart, and it's a D in the weekly chart, and it's a D in the daily chart. What was the question? Jumping a breakout. Yeah, this is really good action, and it makes the 34 to 33.40 area very strong support in ASA, trading at 35.20 up 44 cents. I'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
All right, so if I use this particular candle right here, a little tiny doji candle from the 2010, December 2010, 36.14 major high, this is the exact month that would be the target. And that would be, what's the high so far? 35.28. So, 15 years later, we come within, the month is young, but so far we've come within 36.14. The high today is, okay, let me just go to this right here. And the high today is 35.28. Isn't that amazing? Yeah. So here you've got 34, I would say 34.20 all the way down to 33.08. That's key support on any pullback coming up for ASA. But so far, this is fantastic action. Next question came in, XRP. Oh, XRP. 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 Are you sure it was XRP? No, it must be the dollar XRP. XRP. Yeah, XRP, dollar XRP. That is, oh, that's right. That's this XRP is the, I don't remember what it is. Anyway, it gapped up today. It's at 408.37, up 28. Peak I'll just do it as a chart right now. A, B, and it goes to a C, and it's stalled it. Under it, it's got an A and a B. Yeah, so all I can say is that right now with the gap up, I would say at 408, it really, if it takes out 397 as key support, it's probably going to fill the gap much more. But most importantly, if it actually takes out today's high of 416.32 by Monday or Tuesday, it says, you know what, it could work its way. It could even become an overlapping wave where it goes peak A, peak B, and even a C, and then it goes to a D that spirals into the 450s. But right now, this is a very good action. It's an IPO just beginning of about May or so. And all I can say is that there's no real history, but whatever it is acting pretty darn well right now. Let's see, right there, questions. Okay, so those are the questions, but I have other things that I want you to do that I got asked about. And before we reach a new high. From an early perspective, market can make a new high with a small pullback. Okay, so this is all right. So this is a couple of things came up. I wrote it down. So you've got W, Wayfair, It makes a peak D at 78.06 yesterday. It has 78 round number open, and it's pulling back a little bit today, down $1 at 72.21. And a leg C at the 200-period exponential moving average. We aren't in it. We actually once had it for a brief moment. Didn't keep it. It's Wayfair, furniture, lighting, etc. I'm thinking that this is part of the clues that I'm looking for in the shorter term. Shopify had a huge gap up. Now it's gone to a leg C. This is one we did have in the 28. I just checked in my notes the other day. We had this in the 28s, got out of it a little bit of a gain, and then got stopped out, and then the darn thing took off. Here it is at 149, having hit yesterday. It hit after the earnings report the day before. It had a higher high yesterday. It went to 156.85. And I was looking around for some round numbers. I haven't seen anything except for the low of the 5th, which is way down at 123. So that didn't count at all. So I'm watching this because it's spectacular action. All-time high is 176.29, plunges down to 23.63. And here it is, 120-something points higher. It's at 149.22. Shopify, SOHOP, down $1.85 at 149.22, down just 1.1%. But in the meantime, what we are looking at is these are the laggards that had spectacular moves this year. And that's very important. I wanted to talk about, so we have a stock, Solventum, which we've had for quite some time. Here it is. It had earnings, very good earnings, bounced to 73 yesterday. But a lot of these stocks that we've seen that have good, really good bounces after earnings are giving back some. And this is a spin-off healthcare, Solventum Core healthcare spin-off from Triple M. We've been long for ages. All I can say is that we've had really good gains, but we've kept a core position. And the only reason is that within the healthcare, this one seemed to have held up pretty well. And I'd like to keep it a little longer. We haven't added to it, anything like that. I really wanted to see when earnings came in, could it hold any gap up gain, and it hasn't. So this is important to me. So within the context of positions that we have, I just need to follow this very carefully to see what's next. So that I wanted to do that. Then, so there's some. Funny, I had ASA written down here. So I did that. Yeah, so UA, I heard Tommy talking about UA this morning. So UA is Under Armour. I always wondered, there was a UAA and a UA, they seem to be the same thing, Under Armour C shares. So look, it goes to a peak D in the monthly chart in 2020. It makes a low in the $6 something area, and then it spikes all the way to the 22's peak D, and it does this arch over, and it takes out the left side low. That's been a big struggle. Look at this, lowercase h goes to a lowercase m, takes it out and gaps down today. But what really is fascinating, this is the quickest, I would say it's one of the very quickest you can get from a peak A, from a low bar. In this case, the low was in April of 2025 this year at $4.62, and it goes all the way to a peak F last week. Confirmed the peak F because it was a lower high at 7. So yeah, $4 and something to 7. That's pretty good percentage-wise, but it's very little when you talk about the chart pattern itself. So this is something else I wanted to talk about. The speed with which you go from a peak A to a B to a C to a D, very often, especially as you're getting to a D, in this case is the D to E to F, tells you you've got to be careful because very often there's a pretty sharp sell-off when it's that quick to make higher peaks without a very significant price move. So this is exactly what we got. It makes a peak E in the daily. Look at this left side, right side, the cup formation right there on the, this is UA, Under Armour. It makes a high of 703 on the second. And look at the technicals. And now look at the technicals on the 24th. And you can see they're starting to weaken, but they haven't. But look at that 200-period moving average, how important it is. It goes above, it goes below, it goes above, and then that's it. Whoosh, and today it's down 21%, down $1.33. Another one that I was looking at is something I followed for years. Some of you know that I've followed this for years. We've never actually owned it, and that is the trade desk. Makes a peak D. How important are these Ds? Look at this peak D in the monthly chart at the 140 area back in, I think it was December of last year. Plummets down to the 40s, has a big spike, and the spike goes to right there, goes to the 291 area, peak E, and today comes out with news, and it's down 38%, down $33 at 54. But there were no clues. It has to be news, and this is what I'm saying. This is why I'm saying that, as far as I'm concerned, we haven't met the criteria for a major sell signal in the Dow or any of the indices, because now you've got this bad news that's going to permeate the trade desk. And that says, just be careful here, because going from the 80 to 90 area yesterday has a round number high today of 57, and it's down at 54. This is the kind of selling that is the intensity that y'all talk about when we
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Hi folks, so the question that Dan, I'm not sure if it was for me or if it was for our biotech expert Dan, but I'd say I like to see. So I'm not sure if that was for me, but it says VKTX. So VKTX is Viking Therapeutics. I followed for ages. It made a peak D, yet another monthly peak D, right down in the 100 level, just under 100, plummets down to the 20 level, and now it's moved up. Look, the weekly chart's got peak A, B. Oops, I made that a C. That was wrong. It's actually in a C right now. Let me just move that quickly. Let's get rid of it right there. I just did this very quickly. Okay, but look at this in the daily chart, and this is a technique that I've emphasized quite a bit. If you get to a peak C, and then it takes a long time to get to a D, when it finally gets to the D, so often it becomes an instant restart that says you're going to go immediately to another buy mode, which it went to ABC. Here it is a leg D above the 200-period moving average. So I just thought it's at 38 up 244. So I just thought I'd mention that as a technique. Look, C, you wait, and finally gets to D. Very often within 2 bars, not 3, but within 2 bars, it makes a higher high. Okay, so what am I looking at now? I'm looking to see whether or not the sell signal that I have in the Dow, the sell mode, is going to arch over by next week and make this dreaded H pattern. And that means it'll have to take out the low of yesterday, 43,799. The S&P is in the process of making some, you remember, tops are made not in sequence, out of sequence. I'm watching it very closely to see if the S&P weekly chart's fantastic, but I'm looking to see if it does start an arch formation, and that means 6,300 has to be taken out by sometime next week and not the 6,410 on the upside. And that's the way I'm looking at it. So in sequence, we're going to be doing my webinar on Tuesday. By then, we'll have a lot more information. And it's the process. And remember, I say you don't get real sell signal to sell modes until you get bad news. And that bad news has to permeate the market so that now there's a theme that says selling is rife, not buying. Have a wonderful weekend. Check out my opening call. And I will see you on Monday. Stay tuned for Steve. Oh, Steve is away. So I'll do the news.